Very good evening, members. I, the Conceptual Treasurer of Bangalore branch, request for Chairman Pramod Hegde to escort Oswal sir. Okay. I also request Chairman sir to give a welcome address for this gathering.
Good evening, members. I welcome each one of you for today's study circle meeting on issues in accounting and auditing of related party transactions. I think if you look at the topic, don't you feel there's something wrong, there's something which needs to be changed? Of course, when we talk about related party standard is more of a disclosure related. However, since we kept this topic considering the various intricacies of various aspects in our profession, one is also, while we termed it as accounting, is we do also have IND AS. In IND AS, a lot of these related party transactions will require certain fair value adjustments as well for certain transactions. And if you look at ESOPs, generally when you have a parent and subsidiary relationship, there is an involvement of accounting. So that was the agenda when we termed it as accounting. And if you look at the spectrum of issues surrounding related party disclosures and the audit issues, we as a professional, we often get to hear from the regulators that the lot of non-compliance with respect to disclosure requirements persists. This lack of transparency will not only undermine the trust in the financial disclosures, but also poses a significant risk and integrity in our financial system. And moreover, the challenges doesn't end here. The users of financial statements are increasing day by day. If you see, now even the GST officers are looking at these related party transactions to see whether they can get more revenue out of it, whether certain transaction needs to be charged, whether the deeming transaction which is not there in the financial statement which is recorded, they'll be able to find it from these related party disclosures. And our auditor's role, especially even under the scrutiny of IBC and Insolvency Bankruptcy Code, also is being very crucial these days. And they are also even looking at the preferential transaction from these related party transactions, whatever we've certified and what the management has been disclosing there. Today, we are honored to have CA Vikas Oswal sir, whose expertise and insights into these complexities of related party transaction will help us to navigate this complexities. As we proceed with our today's study circle, let's embrace this opportunity and let's deepen our understanding on this related party transaction and its intricacies, and as an auditor, what is that we are expected to do so. Share our experience. Of course, his presence will, as a student I've been seeing, so his presence will definitely make a value addition so that we can ask questions, go back to the old days and still start from silly questions. With this, I welcome you all. I look forward for a fun-filled, engaging session. Thank you.
Thank you, Chairman sir. I have been given the task of introducing Vikas Oswal sir. Vikas Oswal is the FCA Company Secretary and a DSA. Vikas Oswal is a practicing chartered accountant. He is a Company Secretary as well as DSA qualified. He has been in practice for the last 2 decades. His expertise lies in auditing, taxation and company law matters. He is currently teaching our CA students, and he has published books in auditing for students in CA final and intermediate, which is very much sought after by all the students, most of the students. He has presented many papers in auditing, accounting standards on reputed firms across India. He has conducted workshops on auditing standards, corporate governance, accounting standards and internal auditing. I present before you the one and only Vikas Oswal, sir.
Very good evening to all the members. Today we are going to talk about the related party transactions, related party relationship. This is one area which is not much explored, but it is very much relevant in the coming times. As an auditor of any entity, we should be aware that which are the related party, what are the related party, and what are the related party relationships which require disclosure as per the accounting standards. As a regulator is taking action one after the other, it is very important that we also ensure that we comply with the accounting standards, we comply with the requirement of the law. But there is a lot of gaps actually here. Gaps in the sense actually, first of all, every law will define related party in a different manner. And that's where the confusion happens. So Ministry of Corporate Affairs, they define related party in a different manner. The IND AS defines related party in a different manner. And AS defines it in a different manner. So what happens, there always a confusion. But with this complexity, we have to navigate. First of all, the client also will not make a disclosure which are the related party they have. And should we make a disclosure or not, that is also an issue. There was a company where they had related party, but what happened in the notes to accounts, they did not make a disclosure of the various related party relationships. Example, director of the company, the managing director of the company. Sir, we don't have any transactions with them. You may not have any transaction with them, but you're bound to make a disclosure about the various related party relationship. So the quality of what you can say, my dear, the financial reporting has gone down, that compliance with the standards are not happening. And that is why this is like a focused discussion. Even if we have 2 sessions of study circle, that is also insufficient because there's a GST angle, there's a IND AS angle, so lot of things to be covered. I'll be just be focused, relevant for our practice day-to-day dealing. That's what I'll be focused on. Indian Institute of Management, Bangalore, they conducted a research. They asked their group of students that to research on certain companies, listed companies. They classified the companies into 2 categories. One company which had related party transaction, and the other category was a company which did not have a related party transaction. They made a 2 categorization. Now, after they made a categorization of the related party transaction companies which have a lot of related party transaction, example, Reliance Industries, example, say, Tata Group of companies. So they did a thorough research and they came out with one startling observation. They said that companies which had related party transaction and the company which did not have related party transaction, so those companies which did not have related party transaction, they were more profitable. They were more and more profitable compared to those companies which did not have, which had related party transaction. This clearly shows that something is wrong. I am in the same line of business, the other company is also in the same line of business, but my profitability is higher than a company which has a related party transaction. The lawmaker says that whether these transactions are happening on an arm's length basis, means if I sell the same goods to an unrelated party and if I sell the same goods to a related party, are we charging the same price? So is it happening on an arm's length basis? And second question is that, is it in the ordinary course of business? I am a chemical company and I purchase goods from a textile company. Now, it does not make sense. There is no raw material required of textile for me, but I am making a transaction. Now, this transaction cannot be termed as ordinary course of business. I am a chemical company, I purchase chemical, I can say it's an ordinary course of business. But I am a chemical company, I purchase something textile, it is definitely not in the ordinary course of business. So, this has to be explored to a deeper extent. I am a chemical company, I purchase goods from an unrelated party for say, for example, say 100 actually. But the same chemical I purchased from my related party more than the market value, let's say 150. Why should I pay him more than the market value? It is not on a arm's length basis. And that is why our understanding and disclosure should be more inclined towards a related party. Moment a company has related party transaction, I alert my article that there may be a possibility of fraud risk happening, so you have to be very alert. Two parameters we have to check. Is it on an arm's length basis and is it on an ordinary course of business? But before that, we have to take a steps. We have to sit with the management, sit with the director. Who are your related party? We need to talk to them. We have to go through the minutes of the meeting, the important agreements of the company. What are the related parties? How did you identify a related party? It is very important. Ultimately, what happens, the lawmakers say, because most of the frauds which has happened, like say fund diversion to a related party company, it is all because of there was some related party in existence. Now let me take up the Enron scam. Now Enron scam which happened in 2001, it started the entire world because of the loophole in the law, the promoters, they exploited the loophole in the law. Enron was an energy company, energy supply company. It was making the energy, it was supplying the energy across US. But what happened? They wanted to increase the value of the company. Now, I will get bonuses, I will get some kind of support only if I perform well as a CEO of the company. Jeff Skilling was the CEO of the company. He came out with an idea. See, in the US there is a law that if you start a company and if you make an investment of say 97% you're investing in a company, and if you make investment of 97%, that company will not be your subsidiary company. Mind you, our definition of control is far better. If we are having more than 50% of the voting power, we control the other company. But here, they had a law that till 97%, if you invest in company, if you hold the stocks of that company, you are not a holding company. You will not be a holding company. But if it becomes 97.1% also, you become the parent company. This was a glaring mistake, loophole in the law. What they did is that they started, Enron, what they did, they started a special purpose entity, special purpose vehicle, or you can say like a subsidiary type, but as per US law, it's not a subsidiary. Say Eagle. Enron invested 97%, 3% were invested by the CEO, CFO of the company. Jeff Skilling was one of the person. Their relative, they invested, they became the shareholder. Now, after the company Eagle was started, now what happens? Enron has an asset value of $1 million. What they do is that they sell this asset worth of $1 million to this company called Eagle for $100 million. Because I am getting a profit of $99 million, if I declare more profit, my share price will go up, and my share price will go up, my value of company will increase. That's the whole idea. How do I increase the profitability of the company? So, an asset which was hardly $1 million was sold to a company called Eagle, which was again created by Enron for $100 million. So here in the books, I book a profit of $99 million. Enron profit has gone up, balance sheet, P&L looks very greenery, so there's no issue. But now, what happens? Actually, there's a receivable of $100 million from Eagle. The second step, what happened? Enron goes to bank. They say you give this loan to this Eagle. They say this is a new company. It is not having any operation. So if something goes wrong, what shall we do? No, I will pledge the shares of Enron. I will give my own securities. You give the loan. Based on that security, you give the loan to the Eagle. Bank says okay, because Enron shares were jumping very high in 90s and 93, so it was increasing like anything. Now what happened? This bank gives $100 million to say Eagle. Then Eagle, what it does, it transfers the same money to Enron. So profit earned, amount also received, very good amount is received. Now huge profit is sitting in the bank, but actually it's a bank loan. Now, are you required to prepare a consolidated financial statement? Answer is no, because that company is not my subsidiary as per the US law. No sir, 97%. Does not matter. US law says that you don't consolidate. So I don't have to consolidate. Imagine if I was allowed to consolidate the financial statement of Eagle with Enron, what would have happened? The loan which is sitting in the books of Eagle would have come in the books of Enron, yes. And there is a knockoff of the transaction would have happened. The intercompany transaction would have got eliminated. The intercompany profit would have got eliminated, yes. So I will be looking at two things. One, 100 million loan standing in my books, an asset which is overvalued by 100 million. This is what would have happened. But the problem is that they start exploiting like this left and right. Again, by substance over form, if I apply substance over form, that is a related party. That is definitely a related party. Now they tasted the blood. Now chalo, let us create another company called Kite. Same transaction they rotated through different special purpose entity. They created around 200 special purpose entities were created, which were never ever consolidated with the books of Enron. Why we prepare a CFS? Why a consolidated financial statement is prepared? Because we would like to know what is a group debt. So one company will be making huge profit, other company will make loss. So big conglomerates like say Tata, Adani or Reliance, their consolidated financial statement is most important statement and not the standalone financial statement. It will depict the group's health. And Enron, Jeff Skilling, he went on creating 200 special purpose entities like this. It became a habit. A chair may be costing say 100 rupees, he'll say this is 1 crore worth of chair, okay, book the profit. It became a habit for them. The lawmaker also did not realize that. Some of the employees, they were concerned that how can you book this kind of transaction? And one of the person, what happened, he went on, he was getting so much bonus. Maybe Jeff Skilling or one of the CFO, he went and purchased one island also. This is all what you can say, you have to repay the loan. How will you repay the loan? No, share price of Enron is going up, it is increasing. So it created so much web around them, they could not stop it actually. So 200 companies again, it is increasing left and right. But later, because of a whistleblower by an employee, the lawmaker became very alert that what is happening inside the company, something is wrong. How can they make so much profit? When they investigated, they found that all this kind of bogus transaction they have done. And to that, Auditor also was providing several services. They were providing accounting services, they were providing audit services. So Arthur Anderson was the auditor. They were providing all types of services to Enron. Management consultancy services, you have auditor, you have accountant, there is no concern about self-review threat, your independence has gone out of the window. All these challenges were there with the Enron. And that is where the action was taken by Security Exchange Commission. They ensured that the company, the CEO and the chairman, Kenneth Blake, Jeff Skilling, they were arrested, and the share price of the Enron went kaput actually, and everything went wrong. This is again because of the impact which the related party transaction has created. That is why we as an auditor, we have to be alert to certain things. Okay, this is a high potential area for the transaction. Now, three things which are used as an abused thing actually here in accounting. One, closing stock. Sir, profit is very low. Increase the stock. Sir, profit is very high. Okay, decrease the stock. Closing stock is used as a balancing figure. The second thing which is being as an abusive thing in the account is what? The one is personal expenses. He is incurring traveling expenses, he is going abroad with his spouse, with his family, with his children. He spent 10 lakh rupees. No, it is an official trip. So personal expenses charged to revenue, there is a second abuse. And the third abuse which happens is the related party transaction. Profit is very high. Okay, show some rent to the spouse, show some salary to the spouse, show some expenses, show some salary to the grandfather who cannot get up from his bed also. That range it goes actually, and the abuse is extremely high. even income tax is concerned, even GST is concerned, even company law is concerned. From all angles, this is a very, very important topic. Any fraud you take, almost 60% of the fraud has happened because of the related party. That's the thing here. Father will be extremely successful, son will be there to destroy the empire. This kind of thing happens, and this is the next case. What you can say is the case of what you can say Satyam scam. Raju was donating almost like say 1 crore, 2 crore donation to the temples. This was the thing. But what happened? All his son did actually. That's the problem. Now Satyam, what happened is that they were doing very well as software services. They also started the infrastructure company in the name of their children, Mehtas. So if you take Satyam, reverse of Satyam is Mehtas. Now what happened? They are purchasing the land, left and right they are purchasing the land around Hyderabad as if it is going to jump the real estate, and definitely Hyderabad is doing extremely well actually. Like at first 10-15 minutes if you come out the airport, if you drive to high-tech city, amazing, my God, what development the city had. And the first IT company to see this is Satyam. But what happened? They invested in the real estate projects actually. They borrowed a lot of fundings, and the fundings also went through Satyam. And now what has happened actually here? So they said we will merge Satyam and Mehtas. How can you merge a software company with a real estate company? How can you think of merging also? No, it's okay, we'll create a global company. Some of the independent director who did not understand the transaction, they said we don't want to continue in this company, we are resigning and we are going out. Some of the directors, they were convinced, no sir, it will become a global company. How can you even think of merging these two companies which does not have any kind of compatibility? Merrill Lynch was called. They say, you please do some survey, you give us the input. Merrill Lynch found huge gaps. They are telling that okay, we have a say for example say bank balance, cash and cash equivalent is like say 5,000 crore, but in your bank only 500 crores are lying. What is this actually? You are telling that you have 50,000 employees, but we have only 40,000 employees. Merrill Lynch pushed Raju that either you come out and tell the truth what is happening in the company, because it's all fake adjustments is happening. So what they are doing is that they are booking fake sale, and then fake sale they are booking. What is happening is that you can't show cash received, you have to show fake customer, because one lie leads to 100 lies. So now they are showing fake customer. Now fake customer, now you have to show receipt from the fake customer, because the income tax will say how many years you will show it as a receivable. So they are creating fake bank statement. They are showing receipt but the money has not come. And then what they are doing is that to earn that 7,000 crore or 8,000 crore revenue, I should incur some expenditure. So they are showing 10,000 fake employees which are not there. 150 employees are involved only for doing this adjustment entries. So now Merrill Lynch said that you want to merge both the company because you want to cover the loophole, but either you tell or we will tell. And Raju made a confession. That's the thing. And again, a big fallout of the related party transaction. And that is why this is a very important aspect that we understand the niche of the related party transaction. In the company law, what is the definition they have given for the related party transaction? They say related party means what? It is a director, are the relatives of the director, key management personnel are there, relative of the key management personnel. Then firm where these directors, manager, relatives are like say partner. If there is a firm, in such case the director, manager, relative will be a partner. Or there may be a private company where the director or the manager, they act as what come on, director, manager or relative, they act as either as a director or the manager of that particular company. So related party means director or relatives. Now what do you mean by relatives? Relatives means what? Relatives is like say spouse, father, mother, brother, sister, son, daughter, son's wife, daughter's husband, stepfather, stepmother, stepbrother, stepsister, stepson, stepdaughter is not there. The company law does not recognize stepdaughter. Stepdaughter is not included in the definition of related party. What is the reason for this? So I researched, I asked many contemporaries that why, see stepson you have as a relative, but why not stepdaughter? So I asked many people actually like that's okay, what is the reason for this actually? What is the reason for this kind of stigma that why you're not including the stepdaughter as a relative? Now nobody is able to answer the question actually. So I asked many contemporary seniors in the profession, so many company secretary as well. Then I came to a conclusion that this is something which we have taken a definition from some law it has been taken. That's the thing here. So earlier what was happening, all the laws we were depending upon the UK Companies Act will depend. But this time we have gone and ahead, and here we have just omitted the word stepdaughter. What is the reason? We don't know. Now, so you have the director and their relatives, then key management person. What is key management personnel? The CEO, CFO, the managing director, so director of the company, so manager, they will come under the key management personnel of the company and their relative, and a firm where these directors or these managers, where these relatives are the partners, even that is also considered as a related party. Example, company sells the goods to a partnership firm where the director is a partner, that is also a related party, we have to make a disclosure. That is the thing here. Here one very important document is what? Written representation. Written representation. You have to obtain a written representation from the client. You have to ask them, please give me the list of your related party. First, making them understand that who are the related party. Rather sending an email also. So tomorrow the client will tell, you never asked me, you never told me. This is the kind of statement they do. One NCA met me. He told that, sir, we should protect the client. I said, no, we should first protect ourselves. Me first. With how much difficulty we have become CA, first we should protect ourselves. Then we should think of client. Client what he will tell, okay, our auditor never told. Please obtain a written representation under SCM 580 that what are the list of related parties you have. Once they give the list, then based on that you analyze. That is the first most important thing. Please go through the life insurance policies they have taken. On whom they have taken these insurance policies. That is an important source for you to identify related party. Look into the agreements which they have entered. Ask them, give me the list of agreements. Who are all your related party? Okay, just share the agreements with me. So these are all certain relevant questions we have to ask. Then also, so we have to ask the director. Now, based on the DIN, we can easily find out that which are the other companies the director is also having an interest. He may not tell you, but we can find out through the MCA website that which are all other companies he is a partner in a LLP firm or he is a director. So these queries is very important. So most of the times we neglect SA 580 written representation. That should not be neglected. And then what happens is that also a public company where the director, manager, relative holding more than 2% of the paid up share capital, even that company is also considered as a related party. So first of all, we should have a understanding what is a related party. And also a company where the board of directors are accustomed to act as per the direction of some person. See example, as per company law, a person can become director in maximum 15 companies. He cannot be director in more than 15 companies. Now Reliance Industries has got 400 companies. And Mukesh sir cannot be director in all the 400 companies, he will be director only in the maximum 15 companies. A company in which the director are accustomed to act as per the direction of other person means as shadow director. CBI conducted a raid on a company. They were going through the transaction. When they were going through the transaction, they found that 4,000 crores were transferred from the company's account to some other company. CBI asked them, sir, what is this actually here? What is this company? To which company you transferred 4,000 crore? No sir, I got a call from this person. He told me to transfer, I transferred. On one phone call, you transferred 4,000 crore. Yes sir, I got a phone call from this person. He told me to transfer, I transferred. That is a perfect example. Accustomed to act as per the direction of the person. Substance over form. Who is the real owner? That we have to see. We have to look behind the lines. In one fraud, what happened? There were 3 directors. Now, these 3 directors, all 3 of them were illiterate. one was a driver of a person, one was a gardener, one was a cook. Now these three people were made as a director of the company. They were not able to read and write also. So only thumb impressions they were doing. When they asked that, okay, who is your owner, who is the person according to whom they are acting, they said, no, this one Mr. Shah sir is there, he is telling to do this and we are telling. So now that Shah is a person according to whose direction these three people are accustomed to act. That is why we have to be very careful. We have to see substance over form, that who is the real decision maker in the company. An Enron scam is a perfect example where they gave a number 97%, whatever percentage you give, ultimately who is the decision maker? Who is the person who decides that you will take loan from the bank, Enron? Who is the person who will say that I will mortgage the share Enron? Then how can you not say it's your related party? They are deciding everything to you. They are deciding the price of the product. How can you say it's not a related party? So that is why now more into substance over form, that who are the real decision maker. Now, the transaction between the related party should be on an arm's length basis. Now what is arm's length basis? Arm's length basis means the transaction between the unrelated party, let's say buyer and seller, they don't know each other, okay, they don't know each other, and what happens is that when the transaction happens between two unrelated party in the ordinary course of business, where each party acts to their own best interest, that is called as arm's length basis. Arm's length basis means, like say, both the party will try to fight. The buyer will try to fight that I should get the product at a lower cost, and the seller will always try to think that I should sell the product at a higher cost. At some price they will coincide. That is called as arm's length basis. So whether the transaction with the related party is on an arm's length basis, this is a question we have to ask. Now look at this, how decision making is also impacted. Now one person went to purchase a restaurant. So there were two options given to him. Now he was looking at the restaurant in a particular area. Restaurant 1 turnover was 15 lakhs per month. Restaurant 2 turnover was also 15 lakhs per month. So expenses incurred by restaurant 1 was what? How much? 12 lakhs per month. And restaurant 2, the rent was what you can say 10 lakhs per, totally the expenses was 10 lakhs per month. Now the profit by restaurant 1 was 3 lakhs, profit by restaurant 2 is 5 lakhs. So what you do? You go for restaurant 2, this is a decision making you take up actually, that's the thing here. So a businessman wants to make investment in the restaurant, he will say, which restaurant should I invest? Should I invest in the restaurant 1? Should I invest in the restaurant 2? Which restaurant I should make an investment? So he is taking, said, okay, that the expenses incurred at the restaurant 2 are less, I will go and purchase it. Now here, whenever we are making investment, we always tell the client that you have to do a due diligence. Due diligence means whether it is worth to purchase that business. Should I make investment in that business actually here? So is it worth to make investment in that business? So we always get into what come on due diligence. That's the thing here. So now they scrutinize the expenses. Restaurant 1 salaries was 4 lakhs, here also 4 lakhs, groceries and other items were 3 lakhs, here 3 lakhs. Rent for restaurant 1 was 3 lakhs per month, and for restaurant 2 there was no rent. Electricity expenses, other expenses were 2 lakhs, and here it was 3 lakhs. So now they raised the question that how come you don't have rent? What is the reason? Is it your own building or something? When they did the scrutiny of expenses, the restaurant 2 owner said that this building belongs to my father, and as usual father will never charge any rent, and that is why. Now what happened here, the related party transaction was hidden, and once they said okay, if you add the same 3 lakhs rent per month, now what happens actually here? Should we go for restaurant 2? Restaurant 2 is giving us a profit of 5 lakhs, but suppose say if we charge a rent of 3 lakhs per month, what will happen to the restaurant 2? Will it be a profitable investment? Answer is no, it will not be a profitable investment. So please understand that it will have an impact actually here. They were not charging any rent, but if his earlier decision was what? That I should go and make investment in the restaurant 2. I have to make investment in the restaurant 2. His earlier decision was like this. But later, when he realized that, okay, his father is not charging rent, but if I come to the restaurant too, this person will definitely charge me rent. So in that case, restaurant one was very profitable. That's the thing here. So here what happens, it will definitely impact the decision making. Now, in the company law, what are the clauses under CARO where our reporting is towards the related party? Let us try to understand that. You have clause number 3. Clause number 3 talks about the loans and advances given to related party, that is to company, subsidiary, associate, given to a related party and all other parties also. So it talks about LIGs, L-I-G-S, LIGs. Now what is this LIGs? So clause 3 talks about loans and advances given to related party, investments made in the other companies, guarantees given for the other companies, securities provided for the other company. So here if you see this LIGs in the clause 3, it is an outflow for the company. Example, say Geo, when the Geo they were starting the company, almost Reliance Industries had invested 2.5 lakh crore loans and advances they had given to Geo. Many of the shareholders, they start asking Mukesh Ambani that you are starting this company, but what will happen to this company we don't know, and you should declare dividend to us. He said, he reduced the dividend substantially at that point in time. During 2012, 13, 14, he said, no, I am starting a new venture. And it turned out to be an extremely profitable venture for him. That's a different story altogether. So what happens, most of the times the holding company will give loans and advances to the subsidiary company. So loans and advances given by the holding company to subsidiary company, investments made by the holding company in the subsidiary company are guarantees given for the loan taken by them, are securities provided to the subsidiary company. So you have to highlight. Now what is this SAJ? SAJ means subsidiary, associate and joint venture. So how much loans has been given to a subsidiary, associate, joint venture, that disclosure they are asking in CARO. And whether the terms and conditions are prejudicial to the interest of the company. And suppose say if there is a delay in the repayment, are they regular in the payment of interest? Are they regular in the payment of interest? Are principal, so are they regular? If there is a default, what reasonable steps the company is taking? What reasonable steps they are taking? That is what it is highlighted here. Yourself, behind you. Yeah, please come on the stage. Yeah. Come sir, come on the stage. Can I have an additional mic? Sir, come here. Sir, your name? Yes. Thank you for coming on the stage. One discussion I'll have with you. Now, Dias, am I pronouncing your name properly? Dias, suppose say I ask you a loan of say 5 lakh rupees, okay? And suppose say you give me the loan. Okay, I'll tell Dias I'll repay the loan after 1 month. Fine. After 1 month you're asking me the money. What step you will take? Come on, you ask me the money.
I'll ask for the interest.
Okay, fine. Interest you'll ask. After 1 month, come on. As if you're asking me the money. Go ahead.
Yeah, give me 10 lakh rupees along with the interest.
How much?
Interest percentage?
No, interest you forget. What is the principal amount?
10 lakhs.
No, 5 lakhs.
5 lakhs.
You're scaring me. So 5 lakhs. 5 lakhs highlighted. There's here some issue, some problem after 1 month. After 1 month, okay? So after 1 month, come on again after 1 month.
Yeah, according to the agreement you are supposed to give me. So you please give me.
What to do? Yeah, now next week I'll repay the loan.
I may wait 1 more week.
No?
I may wait 1 more week.
Chalo, you may wait for 1 more week. Now, yes, again you're coming after 1 week. 2 months, 1 week over. Yes, come on, Dias.
Then I'll take some legal action.
Legal action, yes. Legal action, how many years it will take to recover that money?
Depends.
And if you go in a shortcut way, Dias, then what could be the shortcut way?
I may forego interest, I will settle.
That is also not coming then. What will you do? What, any suggestion? Come on, suggestion for Dias.
Hold the collar.
Yeah.
Hold the collar. Hold the collar.
Hold the collar. You're telling us, scaring me, I don't know. Okay, hold the collar. Then what is the option number 2?
Give it in installments.
Give it in installment, consider it. Then,
No, recover the asset where that money was invested.
acha, recover the asset actually.
Restructure the loan. Same thing.
Restructure the loan. Okay, yes, you had something.
Security.
Security. Then any other adverse step?
Take control of
Position
wherever
of
he
assets.
invested.
Where I invested control. Come on, some adverse step actually here. Yes, I am taking you to KR Market, Shrirampuram, Shivaji Nagar. Come on, adverse step. High interest rate. Okay, Chakrabarti. Then how higher rowdies? Will you hire rowdies? It's not coming. If he hires rowdy, how many days the money will come?
He will take half of it. Then.
How do you know that? Is it?
That's the way.
That's okay. Okay, Chilo, okay, no problem. But so, what happens? Suppose they hire rowdy. So suppose he goes in the court. It may take 5 years also, 10 years also. Okay, that's the thing here. Now scene number 2. You have brother or sister?
Yeah, I know.
Elder or younger?
Can
Younger brother or sister?
both.
Both. Imagine I'm your younger brother. I have taken loan of 5 lakhs. What action? What step you will take on me? Collar. No collar. What is this? And gundas.
Now first they will go to the parents.
Parents. Yes, Sago. Is blood thicker than water? Definitely yes, blood is thicker than water. See, because here I am talking about 2 things. One is loans and advances given to SAG and loans and advances given to other than SAG. SAG means subsidiary, associate, joint venture. So here what happens is DIAS approach changes. Moment the related party comes, what happens is approach changes actually. No, he's a related party. So I should not take action on the related party. Means brother, how will he take action? If I'm in the place of DIAS also, I will also think, Are, my own brother, no, chalo, leave it actually here. Definitely I'll use some words on him actually here, okay? But he's my brother, chalo, I will leave it out, no problem. So here they say that okay, you are given loan to related party. What steps, what reasonable steps you have taken? As nicely suggested, no, I'll send a court notice, or I'll file a case, or I'll restructure the loan. Some of you suggested we'll do restructuring. That is called as the reasonable steps. Then whether any loans, advances have been given, which is like say on demand. Now this will definitely happen only between the holding company and subsidiary company. They say whenever I ask you repay the money. And that is going to happen only between them. So now they have given a separate clause in the CARO 2020 about this actually here, okay? So this clause number 3, it talks about that when you're giving loan to your related party, are you taking a reasonable steps to recover that money? What steps you're taking? Definitely you will take steps on unrelated party. But what about the related party? Are you taking the steps? That is what you have to highlight here. So here, whenever we are doing audit, definitely if your client has got multiple companies where he has given loan to say some other party, then you have to be very careful. You have to apply the provisions of this clause number 3. Okay, that is the thing actually. Give a round of applause to DIAS. Thank you very much DIAS for coming. Really proud of you. Now next one. Clause number 4. Clause number 4, which talks about what you can say licks actually here 185, 186. What is this? Basically 185 says that no loans and advances should be given to the director of the company. You should not give any loans and advances to the director of the company. No loans and advances should be given to the relative of the director of the company. No loans and advances should be given to the director of the holding company, to the relative of the director of the holding company. So 185 makes it very clear. You are not supposed to give any loans or advances to the director. Is it applicable to the private company? Yes, because most of us, we are doing audit of private companies. So please, when you are doing audit, you see that any loans has been given to the director or the relative of the director. It is a red alert. Sometimes these guys, what they will do, they'll push that account to sundry debtors actually. These accountants are also very intelligent actually. They'll push the account to there actually here. Okay, fine. So you have to look into the transaction. Let just put me how to do. You cannot just accept just like that. That's the thing here. Because again, when you're signing the financial statement, so again, please obtain a written representation that have you given any loans to your relatives actually here, to the director of the company. Obtain one letter from them, confirmation from them, yes, no, we have not taken the loan. And again, to that also support by doing a thorough checking that whether any amount is going to any other account. That's the thing here. And 186, 185 talks about that no loan and advances, guarantees, securities should be provided to the director, to the relative of the director, to the director of the holding company, to the relative of the director of the holding company. It makes it very clear you should not give the loan. But there are certain exceptions. You can give loans, guarantees, securities if it is in the ordinary course of business. Example, there is a managing director working in a company or a whole-time director working in a company. They are also like an employee of the company. If you are giving loan to employees, same way if you give loan to the managing director or whole-time director, that is very much permissible. So there is no issue in this kind of transaction. So 185 is permissible in cases where the loans and advances are given to the director in the ordinary course of business, but the director should be either MD or whole-time director. That is permissible. That is very much permissible. Further, 186 talks about the limit at which you can give the loan. You can give the loan investments guarantees to a limit of 60% of your paid up share capital and reserves and surplus. So you have to be very careful whenever there is an outflow happening from your client's company to other company. There is a limit, there is a cap. They cannot give loan more than 60% of the paid up share capital and reserves, or 100% of the reserves, whichever is higher. You should be very clear that are they violating 186? So this clause number 4 is an extension of what you can say the clause number 3. Then you also have what you can say clause number 9. Clause number 9, it is also highlighted actually here. Clause number 9 in the CARO 2020 talks about company has raised any money to pay the obligations of subsidiary, associates and joint venture. Have you raised any funds? Have you raised any funds actually to repay the obligations of subsidiary, associates and joint venture? This is a perfect example where Reliance Industries, they raised a loan of 2 lakh crore, 2.5 lakh crore and invested the money in the subsidiary called Geo. So here, what is the purpose? Why? So because what happens, lawmaker says that is there any diversion of fund that is happening? So whether they are taking the loan and they are diverting the funds, is that is going to happening? So they are more concerned about that. That's the thing here. And further, company raised any loans during the year by pledging the securities of subsidiary, associates and joint venture. This also we have to highlight under the CARO 2020 as an auditor of the company. That's the thing here. So are they raising the loan first of all to meet the obligation of subsidiary, associate, joint venture? And are they raising the loan by pledging the security of subsidiary, associate, joint venture? This you have to highlight here. And this definitely in the minutes of the board meeting, you will get all this observation. You have to take out the board minutes, you have to read it actually here. Mainly the minutes of the board of directors, the minutes of the shareholders, that you have to highlight it. That is the thing here. Then we also have clause number 13. Clause number 13 says that whenever there is a related party transaction, you should comply with the requirement of section 188 of the Companies Act. Now 177 deals with the provision of audit committee. Now what is an audit committee? An audit committee is a part of board of directors who focus on what you can say accounts and audit of the company. Audit committee is required in certain class of company. For example, say listed company, audit committee is required in case of unlisted public company where their paid up share capital is 10 crores or more, or their borrowings is 50 crores or more, or turnover is 100 crores or more. Such company should have an audit committee. What this provision says that section 188 that all the related party transaction should be approved by the audit committee. Audit committee has to approve the related party transaction. They make it very clear. Now related party transaction is standing under two pillars. What are the two pillars? One, is it in the ordinary course of business and is it on an arm's length basis? Is it in the ordinary course of business? Example, I gave you the example earlier. I am a chemical company and I purchase chemical from others to again trade it. That is the ordinary course of business. I am a chemical company, I purchase a textile. Now this is not in the ordinary course of business. It is not supporting my business. Why am I purchasing that item? Other day one client called me, Oswal sir, I am constructing a house and I am purchasing cement. Good sir, now can I give my GST number? Are sir, you are a trader in the glass. How can you give no cement, everything will show. Arey sir, you are constructing the house, you can't take the ITC, no. And this horrible, this 4-wheeler showroom salesman, GST togo, sir, you can take it. And I tell no sir, you cannot take showroom on Hilda. Sir, I am CA. I am telling you can't take the ITC. This is a problem, my dear. So what you will tell? Too many things are working actually, that's the thing. It's like an age of too much information. That's a problem here. I still remember 1991 when one of the politicians was assassinated in Sri Perumbudur. What happened actually here, that news reached after 24 hours. So it was so slow, like a snail it was flowing actually here. Now, the very next second, the date got extended, the client will call and tell us. This time has come, like that. It has become like that actually. What to do? Sri Ramachandra. So section 188, it hits the two pillars of the related party transaction. One is it on the ordinary course of business? Is it on an arm's length basis? Whether it is an ordinary course of business or whatever it is, you take the approval of the audit committee. Mind you, audit committee is not required in case of a private company. Then what shall we do? You take the approval of the board of directors for the transaction. Now, second thing. Suppose say the transaction is what you can say is not in the ordinary course of business. Not in the ordinary course of business, but it is on an arm's length basis. So, for example, the market value is 100. I am also paying 100 to acquire the goods. Okay, but I am a chemical company. I am purchasing a textile, but I am paying the right price actually here. So it is not in the ordinary course of business, but it is on an arm's length basis. Then in such case, you need to take the approval of audit committee and the board of directors. The third scenario. Suppose say the transaction is in the ordinary course of business, but not on an arm's length basis. I am a chemical company, I am purchasing chemical, ordinary course of business, but I am purchasing the 100 rupee item for 150 rupees, not in the arm's length basis. Then in such case, you should take the approval of audit committee, the board of directors, and also shareholders should also give their approval. That is what section 188 highlights that. 188 says that if your transaction with the related party is more than 10% of your turnover, then you need to pass a special resolution in this regard. Please read the annual report of the Reliance Industries. It is the best place where all types of related party transaction you will get. Again, I will repeat, all related party transaction approval should be taken by the audit committee. But suppose say transaction is not in the ordinary course of business, but is on an arm's length basis, I should take approval of audit committee and board of directors. But suppose say transaction is in the ordinary course of business, but not on arm's length basis, our focus is on arm's length basis, then the audit committee should give approval, board should give approval, and even the shareholders should give approval. This is the requirement of 188. And appropriate disclosures are made in the financial statement about the related party relationships we should highlight, what is the nature of transaction with the related party. All these things should be highlighted under clause number 13. Clause number 15 of CARO talks about non-cash transaction under section 192. Example, there is a director of a company. He sold, say, goods to the company, and against that goods, he is getting the shares of the company allotted to him. Now, that is a violation of 192. 192 says that you cannot enter into any kind of non-cash transaction with the director or person in whom the director is interested. Example, director's relative. They say that director is selling goods to me, and against that he is getting the shares allotted. It's a non-cash transaction, but we will not accept this kind of transaction. 192 is only valid in one situation where the director is transferring the immovable property to the company, and against that they are allotted shares. That is only one exception that is allowed in 192. 192 says this only transaction will allow. All other non-cash transactions are not permissible under section 192. So, the clause 3, clause 4, 9, 13, 15 of CARO 2020 talks about the related party transaction. Then we also have this section 141 subsection 3 of Companies Act, which highlights about the disqualification of auditor. It states that who cannot act as an auditor of a company? If my partner, if my relative, if we are holding the shares, if we are holding the security in the company, in CS has, now what is CS has? Company, subsidiary, holding, associate and subsidiary of the holding company. If my partner, my relative, if we are holding any security in the company, if we are holding any shares in the company, security means shares, then in such case, I will be disqualified to act as an auditor of a company. So if I am an auditor, I cannot act as a shareholder. I cannot act as a debenture holder. Not only myself, if my relatives are holding the security, even they will also stand to be, because of their holding the security, I will stand to be disqualified. It's a very perfect, valid, made law, because how can an owner of the company act as a auditor of a company? You're a shareholder, how can you be an auditor? Perfect. Then the second condition they put that if you are indebted to a company for more than 5 lakhs, either you or your relative or partner, you will stand to be disqualified to act as an auditor. So we can take loan up to 5 lakhs, 5 lakh 1 rupee, we will stand to be disqualified. Third one, if you have given a guarantee for an amount exceeding rupees 1 lakh to a third person has taken the loan and you have given a guarantee, in such case what happens, the auditor will stand to be he will stand to be disqualified. This is the perfect provision of Section 141 subsection 3, it highlights that there is a disqualification. But this is creating a headache for us as an auditor. Because it's saying that not only I holding the security, I taking the loan, even if my relative takes the loan, I will be disqualified. What is the meaning of relative? Relative includes what? Spouse, father, mother, brother, sister, son, daughter, son's wife, daughter's husband, stepfather, stepmother, stepbrother, stepsister, stepson, stepdaughter is not there. Now all these people are highlighted here. Now let me practically demonstrate how it is becoming a problematic for me here actually here. I want some people to come on stage, come on. Yes? Anybody? Come on the stage, come on. Anybody? Come on. Participants, come on the stage. Please come sir, please come. Yes, come on, I want another two more people. Come on the stage. Participate. You want to come, madam? Come on the stage. What is it? Come on the stage. Any one more person? One of the members? Come on, anybody? Sir? Anybody? Sit down. Anybody else? Come on, anybody else? One person. Come on, Joyce. Come. Yes, Joyce. It's okay, come. It's okay, fine. No problem. I request all the members to stand up. Just stand up. We'll just do one role play, one drama, and one role play we'll do. We just look at the conversation between us and understand how it is dangerous. Okay, that's the thing here. So now, what's your name, sir?
Lakshmi Narayan.
Lakshmi Narayan. Okay, what's your name, madam? Shrija. Dias. Acha, Dias, I know. So now, see, I am a practicing CA, and these are my relatives. You imagine these are my relatives actually. So it's just a role play that is happening actually here. Okay, fine. So now I am a practicing CA. You are playing a role of my brother. Okay, you are playing a role of my brother. Come on. And you are playing a role of what? Come on, sister. Okay, so whether brother is a relative? Yes. His sister is a relative? Yes. Okay, sister is also a relative. And suppose a Joyce, for example, you are playing a role of my stepfather. Okay, just an example, stepfather. Okay, can you just share the mic with Joyce? Dias. Sorry. Just a role play actually here. Okay, come here, Dias. Just come closer. Both of you can be seated, sir. Just be seated. I'll call you. Yeah, just be seated. Sit down. Sit down, sister. Come here, Dias. So Dias plays a role of my stepfather actually here. So it does not look like that. So leave it actually. So just a role play actually. Look at the conversation. I don't like you. I hate you. Okay. My feeling towards you is hatredness, your feeling towards me is compassionate. Okay, that's the thing here. Now you're asking me, did you have coffee?
Did you have coffee?
Why are you talking to me? Huh?
Out of my compassion.
What out of compassion? I hate you. Nonsense.
But I can't hate you.
Tell you are my son.
Yeah, I understand.
No, you're not my father actually here, okay? You call me daddy.
Call me daddy.
I will not call you daddy. What is this? Go away from this house. I don't like you. I hate you.
But I have taken care of you for a long time.
Now you tell me, call me daddy, otherwise I'll buy shares in your client company.
Call me daddy.
I will not call you.
I will buy shares.
What shares? In my client's company will purchase shares.
Yes.
Oh my God. The moment he purchases the shares, what will happen? I will stand to be disqualified. Sri Ramachandra. God. So now what happened? Actually, compromise reached actually. Chalo, daddy, like that. So we reached the compromise. That's the thing actually here. So now acceptable behavior. Now this is what is happening actually here. They are using this provision to blackmail the auditor. In no own house actually will be blackmailed actually. That's the thing here. Yes, please don't. Yeah, my brother. Okay, just an example, my brother. Okay, now you're asking share in the property. Come on, ask share in the property.
Please give me some share in the property.
It's a family property. I will give you after my death. You take it.
I want it immediately.
No. I will not give you now. I will definitely not give you the share in the property.
But I have got all the rights
Huh?
to get the share.
No. I cannot give you any rights in the property actually here. That's it. So all the time you're having bad habits. If I give the property, that's it. Horse race done. IPL betting done. So I will not give you any share in the property.
Sir, I am entitled to the property.
You're entitled, but after my death.
No, we should go for a partition then.
Now, what advice you will give him? Yeah, correct. What advice you will give him? Come on. Buy shares in the client's company. He buys the shares. What will happen? I will get disqualified. That's the thing. I don't tell all these things to my wife. So earlier I had house, let's say ground floor office and first floor house. Niche dukaan, upar makan. So very dangerous actually. Anybody following that actually here is ground floor like that. So suppose say first floor wife will be scolding, all information will go down. So very dangerous proposition. Now what happens? He will say he will purchase the shares in the client company. I will stand to be disqualified. Chalo brother, okay, we'll compromise, no problem actually. That's the thing here, okay? Yeah, that's the thing here. Yeah. What you will tell?
Hi brother.
Hello sister, how are you sister?
Fine.
Now you tell, you want diamond jewelry.
I want a diamond jewelry.
No, I cannot get you.
No, you have to get it.
Otherwise what she will do? Nobody, I think it's a very dangerous provision actually. Sit, please listen, sister. So everybody is like a very, very dangerous proposition which is happening. And we requested government, why don't you change the definition of the relative? I mean, what is this, like a stepfather, stepmother, stepbrother, stepsister, what is this actually here? So government, again, we made a proposal, but again government said no, we cannot change the definition remains the same actually here. And I am indebted for amount exceeding say 5 lakhs. Suppose say my relative, my brother will take a loan of say 6 lakh rupees. He takes a loan of 6 lakh rupees, actually I will get disqualified. What is this? So he will go to the company that CS has, company, subsidiary, holding, associate and subsidiary of holding company. He will go to those companies and if he takes a loan, what will happen? I will stand to be disqualified. And if he gives a guarantee, then what will happen? Suppose say the loan, for example, somebody else take a loan and my relative is giving a guarantee for amount exceeding 1 lakh, then again what is happening? I am getting disqualified. So it's very, very dangerous proposition altogether, very, very dangerous proposition that is happening. That's the thing here. Now they also wanted to introduce this provision for business relationship. So business relationship somehow they stopped actually. Now what is business relationship? Business relationship, for example, suppose say the auditor and the client, they should not have business relationship. Example, say, can you just stand up? Yes, again. Suppose say these three are my client actually here. Okay, he's owner of Apollo Hospital. Okay, and sir is what you can say. Suppose say he's the owner of say some TV channel. Okay, and madam is suppose say she's the owner of Taj Mahal. Okay, so not Taj Mahal, sorry, Taj Hotel. Okay, Taj Hotel. Okay, now you're a owner of Apollo Hospital, suppose say. Okay, now I'm getting a chest pain actually, so I'm calling my client doctor. Hello, doctor. Is the man? It's with you, madam. Give it to me. Hello, doctor.
Yes, what happened?
See, I'm getting a chest pain. Some treatment I require.
Yeah, please take an ambulance and come.
Okay. I'm not sitting in the ambulance. Okay, now see what is happening is that here he cannot provide the service because I am his auditor. I cannot have a business relationship with the client. No business relationship with the client that is permitted actually here. It is not permitted. If I am an auditor, I cannot act as a customer. I cannot act as a customer. Moment they put me on the stretcher of Apollo Hospital, on the stretcher itself I get disqualified. Whether I will survive or not, that's a different thing. But I will be disqualified. Sri Ramachandra, yes, give the mic to him. You are sir? TV channel. I will call you sir that TV channel is not getting relayed to my house, sir. You tell will not relay.
No, you have not paid the subscription, so you
Not like that. Business relationship. So I am your auditor. I cannot act as your customer, sir. Every day fights at home actually, sir. Please, they are asking to resign from your company's audit actually. Please.
we do it immediately.
Huh?
Yeah, we do it immediately.
Immediately what? Resignation or what?
We'll restore the service.
Now you can't restore. If he restores, what will happen? I'll get disqualified. I cannot act as customer. Yes, madam. Taj Hotel, madam, I've come with my family. One room. I want one room.
Always welcome, sir.
One room. You tell no. You tell no.
No rooms.
Why no? What is the reason?
You're my auditor.
Auditor. So I cannot act as a customer. I cannot act as a customer. That's the thing here. So now this became a very big problem, and the draft they also gave relative. Means what? If my brother goes and stays in Taj Hotel, I'll get disqualified. He goes and eats masala dosa in Taj Hotel, I'll get disqualified. What is this? Or my brother is watching some television show, I'll get disqualified. So it became a problematic situation. Then we requested, Appa, sufficient, don't put too much torture. That's it. Sometimes ignorance is bliss actually, Appa. We don't know anything, leave it. So, but sometimes it is required also. Then we requested that government that please don't add this actually. They removed the word relative. Otherwise it would have been a very big problem. But they said that you can do the transaction on arm's length basis and in the ordinary course of business. So whatever price he is charging others, same price he should charge me. Sir, now surgery, you can do the surgery, yes. How much are you charging for angioplasty? 3 lakhs. Any discount for me? Free of cost. So now auditor should not get any discount or something. Whatever is charging the other, same amount I should also give. Then it is permitted. TV channel relay, sir. Relay you will do?
Yeah.
Subscription, how much you are charging?
Same charge.
Any discount for me? No discount, nothing actually. Same I have to pay. Madam, room is available.
Yes, sir.
Tariff, how much is the tariff, madam? Just tell some number, madam. 10,000, okay. So now what happens is that if you are doing the transaction on arm's length basis in ordinary course of business, then yes, you can deal with your own customers. That's the thing actually here. So this is something in the corporate language, but somehow this was, the word relative was removed. Otherwise it would have been a very, very big problem for all of us. That's the thing here. Give a round of clap to all the 3 members. Thank you very much. So kind of you. So kind of you. Now let us move forward. The definition of relative is different under income tax law. Income tax law section 241 highlights the meaning of relative. Relative means what? Individual. It means what? Come on, spouse, brother, sister, and also lineal ascendants and descendants. They are given in a very simple manner. But somewhere, if you apply this linear ascendants and descendants, somewhere all of us will end up become relative. In 11th century or 10th century, definitely we'll all become a relative. So very complicated definition they have highlighted actually here. But income tax, they have their own purpose. They know that these three mischief has to be addressed. One is closing stock, valuation. They are very much clear. That is why they have given two clauses in 3CD. Then they are very much clear about that, okay, the personal expenses, and third one income tax concern is about the related party transaction. Even income tax knows that here the possibility of fraud is very high. Now clause 23 of 3CD highlights particulars of all payments made to persons specified in 40A2B, which is nothing but the relatives. Now, any payments you have done to relative, you make a disclosure of this. So 3CD highlights that. So sir, whether we should disclose capital expenditure, yes. Whether revenue expenditure, yes. Any transaction you have entered, you have paid rent to them, you have purchased some goods from them, you have to make a disclosure of the same. We were doing an audit of a company, and the salary paid to the directors, two directors were there, husband and wife. Some 12 lakhs were paid, each of them. The case went for assessment. Income tax officer called me. He told that, okay, he said that 12 lakh remuneration paid to the director, okay. But 12 lakh is paid to his wife also, the husband and wife. Whether she is eligible to get this 12 lakhs, I was stunned. I never faced the situation where somebody is asking to prove me that is it a genuine transaction. This was the first time I faced with the income tax department. They said, see this 12 lakhs, is she really eligible? Now I did not have an answer. Because I never thought what is the qualification of madam and is she eligible to get that 12 lakhs. So I said, sir, give me 2-3 days time, I'll collect the documents and come to you. What documents you want? You prove it that she deserves, does she have the qualification? He was telling me last week, Oswal, this one guy had come, he is paying 50 lakhs salary to his wife, and his wife, we found that she is illiterate actually here. She does not know to read and write, she does not go to office also. So you are booking expenditure, why should not I disallow this 12 lakh? Why should I not add back? And he took a cue from that case, and he had already disallowed that 50 lakhs. Now I was really stunned. What to do? So I again went back I called the client, I said, sir, he's asking to prove that madam is qualified to get 12 lakh salary. No, Oswal sir, she's an MBA HR she has done, and she's very well qualified, double degree holder, she's a gold medalist also. So I said, okay sir, all these things I will tell, but I want supporting document. I had to literally collect the marks cards of the madam and to support that actually. They will put any number, but we have to tell them that they are capable to get that payment. They say, why should I not disallow? You're trying to evade the taxes. Then I said, ID return, anyway madam's ID return was there with us. So that we will submit that they have declared this money. That is a strong proof. But I had some other thing. You please get me the marks card supporting. He said, sir, just today I had a fight with my wife. So minimum, it will take some time actually to pull off. Husband and wife argument is an ordinary course of business. Sriram and Chandra, it's an ordinary course of business. That's the thing here. Everybody will have an argument. Some other thing actually like that. So whole day everything will be calm. Suddenly something will happen in evening. Or something will go wrong in morning, then it will set right in evening. This is life. Life is like a wave. It goes up, down. It's okay. So I understood actually like that. So I said, okay sir, whenever Madam Mood is proper, you collect the document, because without that I can't prove it. Then after 1 week we got all the papers, all document, we submitted the paper. Sir, she is eligible to get this much pay like that, and all these thing credentials I showed. Then he agreed and accepted. So this is one thing actually here. He is telling that he is not asking you that is it reasonable. Clause 23 of 3CD will not say that you tell that is it reasonable. No, you just tell us that you have a transaction with the related party. Rest all we will take care. Income tax department is like that. We will take care of it actually. You just make a disclosure of all these items. Actually, what is this tax audit? It's an outsourced work which we are doing for income tax officer. Pranab Mukherjee, thank God, in 1984. This same job was done by income tax officer. They said, okay, let us outsource to chartered accountant. Let them do actually. So, let them do the checking. Then you also have clause number 30A in the 3CD, which talks about what you can say international taxation. So here it talks about the primary adjustment which is highlighted under 92C. Now what is this primary adjustment? What is this actually here? See, just let me take a hypothetical example. Suppose say there is a Tata India. Tata India sold goods to say Tata Japan for say $10 million. $10 million they sold the goods to Tata Japan. They are all associated enterprise, so they are related party. Fine. Now there is a company X Limited in Chennai. They sell the same type of goods to another company in Japan, Y Limited, for $12 million. So now here the department says that similar transaction has happened at $12 million between X and Y, but in your company it has happened at say $10 million. So that is definitely not acceptable. It is not acceptable. In your company, it has happened at a low price. Now we have softwares like Capitaline, Provis, which are all, let's say, they help us to find out the transaction. Is it on an arm's length basis, and is it a similar transaction? So now, assessing officer said you should have sold the goods at 12 million, but you sold at 10 million. So 2 million, I am taking it as a primary adjustment. So I am asking you to pay tax on that $2 million. It is not on an arm's length basis. This is a very dangerous and tricky transaction. So now you have to pay tax on $2 million. Plus the officer says that you get that money repatriated to India within 90 days. Sir, not possible, because the agreement was then you pay imputed interest on that. You pay interest on that. So this clause is also very important, a clause actually, especially if your client is into let's say transacting with their customers abroad actually, which is again associated enterprises. There we have to highlight under the clause number 38. So two clauses are there for the related party. Now we have also what you can say SA 550, which deals with the standards and auditing 550 related party. Basically 550, what does it say? That the related party relationships, your holding company, subsidiary company, joint venture, associates, directors relative, key management personnel, their relative, you make a disclosure as per the applicable financial reporting framework. Applicable financial reporting framework means if AS 18 is applicable, you follow AS 18. If IND AS 24 is applicable, you follow IND AS 24. And you show the effect of this related party transaction separately. This is more of a disclosure. So, who are your related parties? You make a disclosure. And second thing is that what is the type of transaction you are having with them? What is the nature of the transaction? So you please highlight that. So SA 550 again highlights that whether the transaction is on an arm's length basis and is it in the ordinary course of business, that is what it highlights actually here. So is it on an arm's length basis and is it on an ordinary course of business? That's the thing here. Let us try to understand this in a more practical manner actually here. Is there? Please come on the stage. Yourself. Come, please come. Yourself. Yeah, come. Please come on the stage. Let us practically understand how this transaction appears actually, how it goes actually. Would you like to come, sir? On the stage? Yes? Yeah, come. Please come. Please come. Just introduce yourself.
Hi, I'm Shashank.
Shashank.
I'm a practicing chartered accountant.
Great, Shashank.
Hi, I'm Srinidhi. I'm in employment in the industry.
Great, Srinidhi.
I'm Srinivas and I'm practicing.
Excellent.
Myself, Bharatki. I'm working in audit firm.
Okay. We'll just do a small skit type actually here, okay? Relax manner. Just get into the role and accordingly you act actually. That's the thing here, okay? Now here I am a businessman and he's playing a role of what you can say my son, okay? And he's playing a role of unrelated party. So come on, related party, we both are what? Come on, related party. Father, son, and what you can say? Unrelated party. That's the thing here. And he's playing the role of what you can say? Recovery agent. Oh, come on, recovery agent. And he's playing the role of what you can say? My manager. Okay? So, manager, what is the first person? Come on, manager, recovery agent, and Okay, now look at the way how it plays out actually here. Okay, now I'll get a call. Please give the mic to him. Hari, your name is Hari, no? Hari will give me a call. He wants goods. So look at the conversation. Yes.
Hello, sir.
Yes, sir. Tell me, sir.
Like I'm actually in need of some kind of goods for my manufacturing. Could you please send me over the goods?
Yeah, I'll send you the goods. It will cost you 5 crore rupees. Okay, but I want payment in 30 days. Is it okay?
But actually, like I've also checked out with few other suppliers. Like they are able to provide me credit period of 90 days, and like they're also quoting better price than what you have quoted.
Good CA actually. But now you play as per what I tell. Imagine I am a monopoly. You tell that okay, sir.
Okay, sir.
What is the price? 5 crore. And what is the terms and condition? The payment should come in 30 days. Is the terms and condition. Okay? This is what is played out. Now my son will call me. Come on. He'll call me. He also wants the goods. Look at the conversation. Yeah.
Hi Dad, I wanted to purchase those goods.
How are you, beta?
I'm good.
How are you?
Everyone's good.
Everybody is good, okay. Same goods I sold to Hari at 5 crores. You are my own son. I cannot charge you that much. I'll charge you 4 crores. But I want payment in 30 days.
Okay.
Okay, chalo. So what is the price I'm charging the related party? 4 crores. Same terms and condition, 30 days. This is a price variation that is happening. It is not on an arm's length basis. Same goods I'm charging how much? 5 crore. But the terms and condition is 30 days. Scene number 2. After 15 days, the unrelated party will call. He wants discount. Look at the conversation. Hello?
Hello. Sir, can I get some discount like you asked me to pay in 30 days?
Discount? We don't give discount. My margin itself is 2,000 rupees. I am doing a social service. I say purchase kiya, add 2,000 margin and sell it to you. I don't have margin at all.
If you are not giving me discount, I can't pay in 30 days.
How much discount you want?
So 10%.
10%? 50 lakhs. Too much you are asking. Chalo, okay, bye. Tata. Okay, I'm keeping the phone. Now my son will call. He also want discount. Look at the conversation. Yes.
Hi Dad,
Tell me, beta.
I was thinking of asking you for a discount.
How much discount you want, beta?
1 crore.
Enjoy. I have huge margin. Don't worry, you enjoy.
Okay,
So, heavy discounts given to related party. First one, I did a price variation. Second one, heavy discount I gave to related party. This is also not on an arm's length basis. 30 days over. Now you're telling that you don't have money.
I asked for a discount, you have not given any discount, I am not able to pay now.
Why did you order the goods when you don't have paisa? How can I make payment to my supplier?
I am good now, but you are the loss, you have no loss.
No. Sir, recover the agent, sir. Recover the money.
Your term was 30 days. You are supposed to pay. Now it's a new date has come. Somehow you have the goods. You already sold to someone. At least you should have paid some advance. So it is fine. At that time, he has not given fine. But now, after 30 days, transaction is over.
Sir, shout, sir. It's okay, sir. Okay, no problem. Now, with shivering voice, he'll call me back. He said, check is ready. Come on.
Sir, your recovery agent is
Recovery agent bandagle ದುಡ್ಡು ಕೊಡೋದು ನೀನು. Okay, no problem. Give the check to the recovery agent. Okay.
Yeah, sure.
Now my son will call. He'll also want time to settle the payment. Look at the conversation.
Hi Dad, my sales have not yet been realized. I want some more time to repay you.
How much time you want?
Another 30 days.
Enjoy, no problem. I'll give you 6 months. So change in terms and condition for the related party. But here same thing I'm not doing with the unrelated party. So this is again not on an arm's length basis. So what is happening? There is a price variation, there is a heavy discount given to related party, and third one, changing all the terms and condition for the related party. Now my finance manager will come. I will talk to him, my finance manager. Yes, please come. Yes, sir. How are you?
I am good, sir.
Fine. How is the recovery happening? All monies are being recovered. All our customers are paying.
I am manager, right? Or
You're my finance manager.
Our recovery is happening fine.
Good.
I think last some sale transaction is pending for more than.
No, it will come, don't worry.
When it will come?
Huh? You're asking. Acha, what's your name, sorry? Bharat. Now, Bharat has sold goods to Bharat Industries, when he is the owner of Bharat Industry, which I am not aware. Bharat, you sold goods worth of 10 crores to Bharat Industries. Are you the owner?
No, sir.
No? Then its money is not coming.
It will come, sir.
Tell me, by the way, every day 12 o'clock you are going outside the office, coming back at 5 o'clock. 5 hours, where are you going?
That is not related, sir.
Not related means what? You are my finance manager. You should be there morning 9 to 5. What is this?
I'll be there, sir. I'll do OT or I'll do post.
So now what is happening is that management having a conflict of interest, that is also a related party. For example, my managers, my directors, they are having some conflict of interest, that is also a related party transaction. So we have price variation, heavy discounts given to related party, and also management having a conflict of interest. That's the thing here. Now what is happening is that I have a property in say Brigade Road, and unrelated party is asking for rent. Look at the conversation. Come on.
I'm actually in need of some kind of space. Can you give me?
One building is there in Brigade Road.
So can you provide me on the property on rent?
Rent 50 lakh rupees per month and advance. Okay? Advance everything.
What is too much comparing the?
Anyway, you're not looking at it. Okay.
Yeah, okay.
Okay. How much rent is 50 lakhs per month and some advance. Now my son is calling for the same property. Yes?
Hi Dad, I wanted to use your Brigade Road property.
Okay, how much rent you will pay? The other party is ready to pay me 50 lakh rupees per month.
I will pay whenever I have money.
Okay, enjoy what to do actually. Father will build the empire, son will do all these things. So, now the premises given without consideration, this is a related party transaction. GST people are also behind this kind of transaction, that you are providing services to them but you are not collecting the money. If I file the GST return of my brother, I have to pay GST on that actually. But again what happens actually, they say there are some related party transactions like this. So that is why we have to be very careful when we deal with the, are you dealing on two pillars? Is it on an arm's length basis and it is on the ordinary course of business? Okay, give a round of clap to all of them. Thank you very much. Thank you very much. And IND AS 24 actually here it talks about the related party. IND AS gives a very beautiful definition of control and significant influence. See, our AS 18, it gives a definition that where the holding is more than 50% of the voting power, they are considered as a related party. But IND AS definition is that those who have a control over the variable returns of the company, they are considered as the holding company. They are said to have a control over the other company. In a very beautiful manner they have highlighted. Let us take an example of Jet Airways and Etihad. Now Jet Airways, they were having financial crunch in 2015-2016. So they approached Etihad to fund them. Etihad said, I'll give you 2,500 crore rupees to you. Now look at the agreement between Jet Airways and Etihad. Etihad said, I'll purchase 24% of your stake. Good. Then Etihad said that I will appoint 3 directors from my side in your company. Good. I will appoint the MD. I will appoint the CFO. I will appoint the CEO. I will appoint the auditor of the company. Then Etihad is saying that I will decide which routes you will fly, where you will fly, I'll decide. 24% stake in the page, it looks like a associate company. But when you look at the terms and condition, what Etihad tells that I will decide where you will fly, which route you will fly. I will decide that who will be the CEO, CFO, auditor of the company, MD of the company. Etihad, it is acting as a holding company or not? It is acting as a holding company, substance over form. Now, IND AS definition is so beautiful that they say that even if you have 1% stake, 0.5% stake, but you are the main decision maker in the company, then you will be said to have a control. There is no arithmetic. They say they don't believe in 50%. After having a very bad experience with the Enron scam, what has happened? They said that nothing doing will not get into that. So in IND AS 24, we should focus on the definition of the control. Control definition is very much important. That is where our problem arises actually. It's very difficult practically to find out. You have to ask the people that who is the main decision maker in the company, who decides what to do, what not to do. Are you deciding? Are your investor is deciding? So it will be hidden somewhere. Now in IND AS 24, they are very clear substance over form. You hold one share out of 10 lakh share, but you are the main decision maker in the company, then in such case the person is said to have a control. So that is very, very difficult to prove on the record. That's the thing here. And there is a domestic partner controversy. In IND AS 24, when they brought a concept of domestic partner. Domestic partner means what? Living relationship. Now this is not suitable to our Indian culture. So we told MCA that you should not use this actually like that. So the MCA people are not accepting that no, international. International means what? Will be compromised with our values. So these movies, they will all show all these things, but that is not our culture. The cost of separation in abroad, US, UK, it is very high. They follow that. Now tomorrow my son will draw a chart. Father, one is marriage, one is living relationship. I said no, that is not as per our system. No. Your IND AS 24 talks about domestic partner. How will I tell him? And television, OTT and movies are hell-bent to spoil the children actually. You may call me an outdated person for the society, but I strongly believe that this has to be dropped actually here. That is the thing here. And because of the Enron scam, what happened? It had a strong impact on the definition of control. Control definition has been completely changed. Now they say that person who has a power over the variable return of the company, who decides that what dividend to be declared, or who should be appointed, who should not be appointed, that person is said to have control. So our AS 18 definition is a very old definition. They state that you should have a holding of more than 50% of the voting power, which is a more old definition altogether. That's the thing here. But again, both the standards, they talk about what? One is that you need to identify who are the related party, that management has to, you have to put the onus on the management, that you please identify who are the related party. Second one, what is the nature of relationship with the related party? Is it a holding company? Is it a subsidiary company? Is it a director? Is it a CEO, CFO? What is the nature of relationship that you have to take onus of it? And what is the type of transactions you are having with the related party and what is the purpose? Because purpose will decide that is that transaction in the ordinary course of business, is it related to the company's objective? The same aspect is highlighted in the AS 18 and the IND AS 24. Okay. Any doubts, any queries, any questions you are having, members? Any questions you are having? Any doubts, any queries? Yes, go ahead.
Is it practically possible to apply 143D with regard to holding up shares in any company?
Which one?
Holding up shares or securities of company, particularly in case of our bank audits and all that.
Yes. Can you repeat the question, sir?
Because of 143D, is it practically possible for us to comply with that one?
No, it is challenging. I agree with you. Actually, it is not so easy. Actually, it's not challenging. But again, we have to rely on SA 580 written representation only. That is the one thing. And more than that, whatever representation they are giving, that we have to validate. Okay, is it making sense? Is it acceptable or not? That we have to gauge. I do agree. Practically, it is very, very challenging in nature. Okay, good question you have asked. Any other question? Any other query?
So today I came across a situation where the director is trying to get a loan in his individual capacity, but he was denied. So actually the NBFC which is giving loan to the director for purchase of the property, they have included the company in the debt structure. So the company becomes a co-borrower over here. But however the property is in the name of the director, the EMI what he's going to pay is going to pay from his own bank account. But how do I treat this transaction? But however, since I presume that since he is a co-borrower, if the director defaults, the company would step into play. So can I treat it as a guarantee that the company has given, or how?
Definitely you have to treat in that manner only, and you have to make ensure that in the financial statement appropriate disclosures are made.
Because as per the Companies Act, company can guarantee a loan given to the directors if there is a special resolution passed and an explanation to that.
Notice has to be given having that explanation, correct? And it should be used for the principal business purpose. That is violating. It is violating 185.
It is violating 185.
185 is getting violated actually here. So that you have to make a qualification.
Yes.
CARO is applicable to that company.
Yes, it is applicable.
You have to highlight that in the CARO that it is not complying with 185. It is a violation, complete violation, because the third condition is not getting satisfied.
It is for the principal purpose of the process,
yeah.
that's violated.
It is not, it's violated. Absolutely, correct. Any other query?
Purchases from a related party, whether we have to include the gross purchase, including GST or excluding GST?
It has to be included, what you can say, including the, GST. Complete transaction you have to highlight actually here, okay? A full transaction you have to highlight. So the transaction here, all gross up you have to highlight actually here. Even anything you have paid for packaging, anything for that matter, any amount that has been transferred, so complete transaction you have to highlight, including GST.
So yes, if you include GST, and if you're, suppose you're making a sale to greater than 100% sale, if you include GST, that will exceed your actual sale value itself.
No, not like that actually.
So we had this one controversy, I think, the problem with the auditors.
No, see what happens actually, you are from the practice side or service side?
Practice side.
Practice side. So what happens actually, here you have to gross up the amount and highlight it actually, okay? And further, what is the reason actually, what is the reason they highlighted to you?
Saying that, say, actual sale value is much lower than what is disclosed in related party transaction.
Okay.
When you're making 100%.
Okay, related party transaction, you're telling that is not on an arm's length basis, that is what you're telling?
No. Say sale is made up to related party 100. Total sale. Okay. 180 you're going to disclose in RPT.
Correct.
You're saying that your sale value is more, disclosed in related party is more than actual sale itself.
But here what happens, the transaction, the word used is transaction, okay? That is why you are including the GST part actually. That can always be explained. It is always, we collected the GST, we paid to the department. Okay, and transaction will include all components of the transaction. You can't say standalone without excluding GST I will highlight. It should not be excluded GST, including GST you should highlight it. Okay? Good. Yes, go ahead, sir.
The company is a developer and some of the flats are sold to the relatives of the director.
Some of the
flats.
Ah.
The company is developing residential flats.
Okay.
And some of the residential flats have been sold to the wife of the director or relative of the director. So some token advance is received.
Okay.
There is no progress payments received as compared to other clients which they receive.
Okay. Then it is they are not. Then it is not on an arm's length basis because the terms and conditions are not same for the related parties. So that is to be a disclosure part actually. Here. You have to caution the client in that terms. You are giving a different terms and condition to your spouse and different terms and condition to others. So that is definitely not acceptable. That you have to highlight to them. That's the thing here. And it is a part of what you can say you can highlight in your report also for that matter actually. Okay? Because it's violating the terms and condition. Terms and conditions should be same for everybody. Amrapali builders, they went on to register some certain of the properties in the name of their employees for 500 rupees. Shocking. Flat worth of 50 lakhs, they register 500 rupees, 1000 rupees like that. So sometimes builders they do that actually here. So that has to be addressed. So you have to highlight that, sir. Yes, sir. Go ahead, sir.
Sir, a holding company gives a loan to its subsidiary company. If the subsidiary company is into losses, it is not able to pay the loan after some time. Now the holding company wants to waive this off. So how this will be disclosed and what will be the accounting treatment for waiver of loan?
Waiver of loan actually. So you have given the loan. Holding company has given the loan actually, correct?
Yeah.
And now you want to write it off actually, correct? So it's a cessation of liability for the subsidiary company, correct? Section 41 will get triggered there actually. The problem is not there for the holding company, but for the subsidiary company it will be a problem. They may be treated as a deemed income, so you have to be very careful there actually, sir. Yes, sir.
Sir, a private limited company has taken unsecured loan and it has financed that loan to LLP which the director is a partner. So is it a violation under 185?
So they have financed actually, yes.
It's a violation.
Yes, it's a violation. Is it the principal business is same actually of the LLP and this company?
Sir, the private limited company is a manufacturing entity, whereas this LLP is doing online trading.
Online training of
of the
what?
same product. What
Same
they have
product.
manufactured there.
I think somewhere you can link it actually. Maybe if you can just
But
note that.
there is one point in that section 185 wherein it tells the loan should have been given to the company only, not to an LLP. That there is
Firm,
a
see it can be given to the firm actually here. Yes, company is there plus firm actually here. But here what happens, LLP is a body corporate. It falls in the definition of body corporate. I think you can exploit that. You can save your client in that manner. So it will not be a violation according to the 185 because it is linked business only he is doing actually for principal business criteria.
If the company is a manufacturer and he is doing same product,
It is linked, it is like say enhancing his own business only, no actually. So I think it can be done. It
Can we
be
have
done.
an agreement, internal
Yeah,
agreement?
yeah, you can have an agreement plus special resolution plus notice.
Yes.
If you can strengthen your documentation, no, it will not be a violation.
Okay.
Okay.
Thank you, sir.
Whether you can say whether he can be acting as an agent, that you can look into it and you can exploit that provision. Yes, sir. Go ahead, sir.
Can the holding company give intercorporate loans to subsidiaries as working capital for short term without interest?
It can be given, sir. It can be given. It can be given, sir. Thank you very much, all the members. It was great pleasure talking to you. Thank you very much.
Members, we have two announcements. We have on 16 March, we have Women's Conference. I request all the lady members here to please register yourself for that. And also, other members can also contribute for the conference. And there is also one-day seminar on bank branch audits on 30th March at the Grand Macgrath Hotel near Garduma. So please register for that. Yes, with that, we end this session. I thank Oswal sir for imparting his knowledge with you people. Thank you all. Have a good day. Sorry, one second. I request the chairman, please hand over the meeting. Also, I said it can be watered also. It's a real plant.